What is up, investors? Going to do something a little bit different here on the channel today. I'm going to show you all of my brokerage accounts. I'm going to show you exactly how much money's in there. I'm going to show you exactly what stocks are in there. I'm going to show you exactly what I bought and sold over the first half of the year, because while I'm recording this, we're on the last day of June, and so that means the year is technically about half over. And so I want to show you a first half result of all the investments that I have done during the first half of 2020. Now, before I get into it, I want to make a few caveats, and I want you to listen closely to what I'm going to have to say here, because it'll give you an idea on if my methods will really work for you or not. First of all, I am not a trader. I am a buy and hold investor, and it's nothing against trading. I actually want to recommend a YouTube channel for you. I'm going to link it down below. His name is Trader Merlin. I have been following this guy for a long time, for as long as I can remember. He used to do a podcast called Power Trading Radio, and he's just recently branched out on his own. He's got a great live YouTube channel that he presents every 2 o'clock Pacific time. Every single day he does a live show where he goes over charts, brings on guests. I think it's a great show. And if you're a trader, or even if you're like me, a buy hold investor, I think it's worth checking out. I'll put a link to his channel in the description below. But I'm not a trader, mainly because I simply don't have time. I'm a father, I'm a homeowner. My kids are young. I like to spend all the time I possibly can with them before they head off into school. And so for at least the next couple years, I will be a father first and an investor second. Maybe when they go to school, I'll start trading, and this channel will start evolving into a little bit more of that. But for right now, I'm going to focus on being a buy and hold investor. Number two thing that I want to make clear is I was absolutely stone cold broke about 10 years ago. I opened up a business in 2006. And by 2008, I was closed. And if that time frame sounds familiar, the financial crisis hit my area, Central California, worse than I think outside of Las Vegas, Nevada. I think where I lived was literally the epicenter of the housing crisis. And so as a business owner, I really felt it. In fact, the guy that owned the building that I had my store on, he got foreclosed on as well. So it was a tough time for everybody, but I was absolutely stone cold broke. And by broke, I mean my landlord was chasing me down for rent. I was fishing in my couch for some money so I could go buy a bag of chips to eat. It was a tough time. If you're watching this video right now and you're having a tough time financially, I just want you to know that you're gonna be able to get through it, and there's gonna be better days on in the future, and you can do it. The best thing to do is when you are broke and you don't have any money is to start acquiring more skills. And now luckily for me, the job market was so bad in 2008 and in 2009, I couldn't get a job. So I sat at home all day. I got on the internet. I learned how to make websites. I learned about affiliate marketing, and I'll show it right here. I've made over $500,000 from Google AdSense. That includes basically nothing here from YouTube. I don't make a lot of money posting these videos, but that all comes from websites and things that I've won. An eBay Partner Network and Amazon affiliate has been equally as lucrative. So I've been very, very blessed, and I hope to share some information with you today that will help you out. Now, we'll jump over to the computer in a minute, but I just wanted to make clear I'm a buy and hold investor, and I'm going to be holding for a very long time. My time frame is probably about 20 to 25 years. So just keep that in mind. And hey, excuse the hat. I had to give myself a quarantine haircut, so I'm kind of hiding that from you guys. Let's jump over to the computer, check out my investments. First account we'll take a look at is a Charles Schwab account. I've had this account for a long time. I regularly deposit into this account, I think about $30 a week. But as you see here, I don't have a lot of investments. My account value here is at 14,000, but you'll see that over 9,000, almost 10,000 of that is in cash. And if you come down here and look, I have about $2,000 worth of short-term treasuries. This is basically like almost like a money market account. I think the yield on something like this is about 2%. Now, what I might do at some point is dump more of this cash in here. I'll tell you why I have such a high cash balance in here and why I don't have a lot of investments is only because this is tied to my checking account. I've moved money in here relatively frequently, but this is kind of like I use this account as my safety reserve. Most families, most responsible fathers, as I am, need to have a reserve, and I've bumped this up over the last couple months as you can imagine, the uncertainty in the world, the uncertainty with income and things like that, depending on where you work, has gotten tremendously uncertain. And certainly with my businesses, when this whole virus thing started, I was very uncertain. So I bumped up my cash here. My cash reserve, took a lot of money out of my businesses, didn't reinvest, and started holding cash just in case. I want to be able to pay the mortgage. I got 2 kids. I want to be able to pay for their school, my car, those kind of things. Now, as it turns out, I probably are over aggressive here, but I'd rather err to the side of being over aggressive. Now, maybe that's my own dad paranoia playing in. If you're a younger guy, you're single, you live on a couch of your friends, or you share with a roommate or whatever, you probably don't have to go this overboard. This is in excess of 6 months of reserves, probably for my family. But it is something that you want to think about. Now, I do have some older investments here, XPO, the joint. Now, I did make one purchase. This was actually yesterday. I made this purchase. I did a video. I'll put a link in the description below. I did a video where I covered Simon Property, and I said, you know what? I'm going to buy a couple shares of this. Bought 2 shares. Like I said in the video, I would inch in, and sure enough, I am inching in with only 2 shares. But look, I'm up over 5% already. I'm up 191% of my XPO. I bought that a long time ago. Bought Joint a long time ago as well. That's up over 140%. You see, I don't hit home runs every single time. Totally whiffed on this stock. It's been reverse split down to 1 share. I paid $127 for that 1 share, and it's currently worth $1.37. But in general, I'm up 100% in my equity investments. I've got some ETFs and stuff that I throw obviously very, very small amounts of money into. And again, I have this short-term treasury as well. I've got a couple mutual funds that I used to invest more into, but I sold most of these. I kept maybe a share or 2 shares or a share and a half or so there. That's why I have these. But again, it's not something I really actively invest. Again, this is not an account I'm actively investing in, although I did just pick up this Simon Property, but it's where I kind of hold cash, temporary hold cash, move cash in and out for businesses. It just so happens right now it's worth about $14,000, and I have about roughly 10, call it even 11, almost $12,000 in cash. I might put that to work in the stock market, and if I do, I'll make another video about what I do with all that cash. The first account I'm going to show you here is on autopilot, so there's not a lot to see here. I have about $31,000 in here year to date, down 3.7%. That's honestly not bad. You see some of these a little bit bigger than others, but the bulk of the money gets dumped into this S&P index fund. It's kind of a low-cost Fidelity fund, I think. And so I dump most of my money into there and then put money into other parts of this, but it's worth about $31,000. Now, I don't necessarily subscribe. I think Jim Cramer's famous for saying, put your first $10,000 into an index fund and then go from there. I think that part of that is true. I think you need the discipline to save up $10,000. But if you want to jump right in and buy, your common stocks and just your single tickers, that's fine as well. But this is something that I just dump this money into here and it automatically invests for me. And so this, I'm not saying is the best strategy, but it is something I am investing for the long term. In the short term, year to date, it's not looking that great, but some of these other returns are not bad. It looks like I'm making a little bit of money here. Just wanted to show this to you. So it's about almost $32,000 in this account. Now here's a look at my Robinhood account. This is a purely speculative account. I think I deposit maybe about $10 a week. I started this account, as you can see here, back in April 2016, and today the account is up about 72%. So over 4 years, that's actually not a bad return. If you want to take a look at a tighter time frame here, just in the last year or so, year to date, I think I had, it looks like $3,145 on January 1st. And I'm just up by just broken even. You see how big of a dip I had, the COVID-19, big dip here. My account was way down, almost 50%, and it's rallied back all the way back to even. Now, I haven't made a ton of purchases inside this account in a little while. I have the joint, which you saw in my Charles Schwab account. I have this is like a dividend paying ETF here. Or not an ETF, I'm sorry. This is like a hospital REIT, actually, I believe. A silver I trade in and out of in this account. That's a video maybe I'll do in the future. I trade in and out of gold and silver, typically in the options. And so I typically use my Robinhood account. They were one of the first sites that had free options trading. And so I've been experimenting a little bit with this. They've had a nice run recently, so I haven't been playing around with that too much. I've got Facebook share, which I've bought on the dip every once in a while. MGM, which I probably should have bought a little bit more of a little while back. I've got Bank of America in here, Wells Fargo, Citibank. I've got some bank shares. I bought these quite a while ago when they were a little bit more out of favor. Got a little micro cap company here that really hasn't done a whole lot. I got Shake Shack. I used to have quite a bit more Shake Shack. I think I bought it in the $20 to $30 range and I sold it. I sold most of my shares. I probably had maybe 10 shares or so, and I kept a share just because I love the Chicken Shack so much. In fact, I had one the other day for the first time in a while. Visa is a company I love. I always am supporting. I've got a few shares in here, got more in my retirement account. PayPal's another company that I've got a couple of shares in here. RTW, this was pure speculation. You see this stock is at 20 cents. I probably paid maybe $1.50. So I'm way down on that. AT&T, got 13 shares of AT&T. Always add to it. I did a video. I'll post a link to that in the description below. Always adding to AT&T when it's in that sub $30 range, and we're very close to that point. I'm kind of waiting for maybe a further pullback in AT&T shares, but I'd like to add to that as well. Both of these stocks you'll see in a minute are in my IRA account as well. Verizon as well. Now, these are all new. Okay, these are all COVID-19, virus kind of additions here. Verizon, Collectors Universe. This has had a really nice run. I think this is Pfizer, PFE, bought a little bit of that, bought a handful, just a tiny bit of Google. And I did videos on both these stocks here, PTGX and AES. I think if I click on this, you can maybe see how much I paid for it. But this stock, I've done really well on actually. And so my average cost was only $7.96. And so you see it's at $17.66. Like I said, I did a video on this stock. I'll post that in the description below. But that's my Robinhood account. It's obviously my pure speculative stock. I don't really care about this money. It's only $3,000. If this money goes to zero, it's not going to hurt my lifestyle. If it triples or quadruples, that'd be great. Maybe I'd pull some out and buy another Rolex or something like that. But this is something I play around with. I don't endorse really any of these stocks necessarily, outside of like the Visa and AT&T, Verizon, some of these ones that I pointed out. Some of this stuff is pure speculation. I wouldn't look at any of these investments and go and run with them without doing a lot of research before you jump into these. Obviously, Facebook and some of the bank stocks are the big caps in here, and Google, but some of these other ones, you want to do a lot of research. But hey, look, again, over 4 years or so, I'm up about 75% in this account, and I'll take it. And hopefully that trend continues going forward in my Robinhood account. Okay, now getting into the account that I actively manage probably the most. This is my IRA account. And it's interesting that this account has a contribution limit on it of about $6,000 per year. I won't get into it, but you're limited to how much you can deposit into an IRA account. For whatever reason, I take this account the most seriously because it is tax deferred or tax free in some cases. And so I do like focusing on this account because this is the account I'll likely retire off of. Now I've got it pulled down here because there's an account number up here I don't really want to show, but it's got about a $33,000 value to it, and I have an unrealized gain of about 36%. You see I have some stocks in here I've had a long time. Apple, I'm up 158% in my Apple shares. I'm up 132% in Nvidia. I'm up 71% in Nike. I'm up 60% in Amazon. I'm up about 35% in Facebook. I'm up about 33% in Visa. Starbucks has taken a hit a little bit. This used to be a lot higher, but that's at 25% gain. I've got an 18% in Google, only one share though. Some of these, obviously, you know, Amazon, I've got 11. This is value over here. I've got $11,000 in that. Some of these are a little bit smaller, like Starbucks and Nvidia are only about 1,000. Some of these are newer positions. I'll go over each one in just a minute, but I've got Pepsi, I've got Walmart, I've got, I think this is Chevron here. I've got Verizon. Now, STIP, this is just what I dump money into. You'll see I got about $36 of purchasing power. What I tend to do is just dump money into this STIP and this HHO. This is not a endorsement of either of these two stocks. It's just money I tend to dump in here. I've got about $700 in cash dumped in here. And when I do sell out of these, I usually invest it into stocks. I've got Bank of America stock. I've got, I think this is Realty Investment Trust. I've got Disney. I've got AT&T. Now these are losses, so these stocks I'm not doing quite as well on. I've got JP Morgan. I've taken a loss on. That's a new one. GM, ConocoPhillips, Vuru. Some of these were real speculative back in the day when I was a little bit more speculative in this account. Take a look at Limited Brands. Boy, this used to be $100 stock. Now it's $15. I actually bought it. Let's see, my cost basis is $50. So I doubled my money at one time on this. Now, what this doesn't show you, if I've collected a lot of dividends, I probably only bought maybe 10, 15 shares of this. I've picked up a ton of shares in dividends. So this loss is not totally accurate, but it is mildly accurate. I have lost quite a bit of money in this. I'm down 70%. And RTW, another real speculative. I don't know why I speculated on this one. I only threw $130 at it. Now it's worth $7.82. So my winners, not always. Let's see, I started that in 2018. So not always hitting home runs in all my stocks. Now let's take a look. So this has been a very, very eventful first of the year. So I've got my transactions here from the first of the year all the way till the current day when I'm recording this video. You see here, I did something really probably stupid, something I don't normally do, but I did sell the 2 shares of Tesla that I had in this stock, which at the time was a good move because a month or two later, this stock tanked, I think, back into the $300 range. Now, I probably should have rebought it. I didn't, but I did sell 2 shares of Tesla for $763 each. Obviously, in hindsight, I think they're over 1,000 now. Probably not the most wise thing to do, but in the short term, it was the wise thing to do. I should have bought back in, but I didn't. Now, I'll skip these STIPs. So this is where I'm just holding cash. So I'm just holding $3,000, and then I end up selling it and start buying stuff. So I bought Realtor Investment Corp at $71. I think I then bought it again. Look, I bought 3 shares here at 71, and then I bought 3 more at 57. I think that's about where it is today. So I'm kind of averaging into this. It does pay a dividend, but I was a little too early. Obviously here, this is like pre-COVID. I'm a little early on some of this stuff. I bought Walmart here for $106 a share. Let's see where that's at. So it's at $119. So I've actually done pretty well over at that. I'm not really looking at this in the short term, but I'm just showing you, my mindset at the time. Walmart was at $106. It's a new position for me. It's going to be back in this range here. You see, wow, the stock, boom, went down here to the 106. I actually picked it off almost the low here, and it's come back pretty nicely since then. Now, next stock I bought on a dip was Disney. And so this is a stock I do like buying on dips. I bought it at 114. You see it's at 111. I'm probably going to have to average back into this. The parks have closed longer than I thought. Sports have been away longer than I thought. I think Disney's going to have a dismal earnings. I think probably for the rest of the year, Walt Disney's going to have terrible, terrible earnings. I think it could retest this 52-week low. And obviously, if it does, I'll be there probably picking up some shares. But I'd wait here. I think a 111 is a little rich. It was a little, I thought Disney's hopes were a little bit, obviously I only bought one share, but I thought Disney's hopes were a little bit better back in February. I thought maybe this thing would pass. They do fine. Didn't really expect all the sports to shut down and still be closed 4 months later. So there we are with Disney. Verizon, I bought a single share at 52. It's at 55. That's about what you're expecting with a stock like this. You're getting I probably got over a 5% yield at this. I'm holding this stock for a very long time. Now, Verizon was that stock. Then I bought JP Morgan at 115. Let's see how I did there. Ooh, no, it's at $94. So I'm going to have to probably average back into JP Morgan. As you know, a lot of the banks got absolutely hammered with some of the announcements on dividends and buybacks and things like that. I think that is going to have banks trade in this sideways to slightly down motion for a while. I'm not going to run out and average into my JP Morgan shares. I think these bank stocks are going to trade sideways, something that I did not anticipate. But I'll definitely don't mind picking up more shares of JP Morgan at a later date. You see right now the PE forward is 17. I think that might come down a little bit, and this yield might tick up over the 4, maybe even 5% range. So I think at that time I'll be more excited about adding shares of JP Morgan. Now moving up the line here, again, STIP. This is just a treasury. I bought one share of Visa for 175. That's at 193, a stock that I like to buy. Look at this dip here. Man, we had this nice dip. I didn't get it on this dip. I think I got it as it was coming out of this dip, maybe into this dip. Let's see, when did I pick this up? This was back, this is back in February, so it was actually probably back in here. I picked it up on this dip. Obviously, it shot back up and then went all the way down. I probably should have added back in here. Let me see if I did. No, I didn't. That was a mistake, but hindsight is 2020. I did happen to pick up a share of this or two in my Robinhood account, as you guys saw early as well. But I paid $175 for Visa, and it's at $190. That's not bad at all. Now, Bank of America, another bank stock that I like. You see, I added 2 shares here at 25. I added another share here at 21, and it's at 23. Again, the bank stocks are going to trade sideways. We've got a 15 PE here, got a 3% yield. Banks are going to trade sideways, in my opinion, for a while. I think you can inch into these very, very carefully. Not at the current moment, but I think there will become a time where the banks become good buys, and they probably will rally back up into, at least Bank of America will rally back up into the low 30s, maybe even back to the mid 30s. Will we retest this $18 low, 52-week low? I don't think so, but I don't want to make predictions on here, especially with these banks. A lot of things are uncertainty with those stress tests and what the Fed is basically making these banks do or not do in terms of raising dividends and doing buybacks, but I think they'll get back to that at some point. Now, after Bank of America, I bought a little bit more of JP Morgan. We saw that back here. I bought it at 115. I bought it at 108. I think it's at 90. Bought a little bit more of Verizon here at 55. That's about where it is. I got my Bank of America. Then I bought Facebook at 160. This was a stock I already had fairly, I want to say significant exposure to, but here's my Facebook. So I already had 14 shares at $167 price tag, and I added another share at 160, and you see here Facebook booms rallied actually really nicely. It's close to a 52-week high. It's come back a little bit with a lot of their ad troubles and things like that, but yeah, $227, and I picked it up at 160, and my cost basis overall is at 167, so I've got about $3,000 worth of Facebook. Gotta love that. AT&T, like I said, whenever this stock dips below 30, I like to buy. I picked up a share here. Chevron is right here, the CVX. I picked it up at 71. I think this is a very minor I think I only have 2 shares plus change on dividends. So I only got 180 bucks in this, but I picked it up for 70. It's at 90. You know, crude oil is a tough one. I just like to have a little bit exposure to oil. I'm not an oil expert. I probably would be better to do ETFs and things like that, but Chevron's such a high quality name. If you take a look here, they traded a pretty rich PE, I think probably because their earnings have come down. But look at this yield. You're getting 5-6%. As long as that stays in that range, you're getting nice return on your money there. Now, a brand new investment here was Pepsi. I bought 2 shares of Pepsi for $115, and Pepsi's at $132. So those ticked up nicely. I did pretty nice with a lot of my new investments outside of JP Morgan. I did nicely with Pepsi. I did nicely with Walmart as well. Now, finally, bought a little bit more real estate investment corporation here. But for me, the big buys here are these Amazon. So I've got I'm way overweight. This is why I don't want you to watch this and copy what I'm doing here, because I'm out of whack in this portfolio. Okay, this portfolio, as I saw you, was where I got to be careful not to show my account number up here, but I got $33,000 in this account. I got $11,000 in Amazon. That is completely out of whack. You see, I started buying Amazon back here in 2016, bought a little in 17, bought some in 19 again, and 20. The most recent purchase of Amazon, I bought it at $22.97, and it's 20, so it's gone up about $500 since I bought it. So you see my overall cost basis in Amazon here is at $173 or $1,730, and it's up about $1,000 a share per then. And I'm up about $4,000 just in Amazon. But I'm way out of balance in this portfolio, but that will happen in your IRA account. It doesn't have to happen, but in your IRA account, you're only allowed, like I said, to deposit $6,000 per year. So unless I want to come in here and rebalance by selling some stuff, which I don't really want to do, this portfolio is going to stay out of balance until I can dump some more money into. It's really going to take another year or two to get that in balance, but Amazon's such a high quality company. It's one I've talked a lot about on the channel that I love. And just look at this move. And if you want to look at like a 10-year chart, guys, look at this 10-year chart. You want to do a max chart? Look at this. I mean, can this come down? Sure. Should you buy the dips on Amazon? Absolutely. Would I be buying up here at 2,800? Probably not. But this is just a phenomenal company that has phenomenal leadership and phenomenal execution. So it's why I don't mind, at least in my position here, going overweight Amazon. So I'm heavily overweight Amazon. It's actually the only stock that I own in this portfolio that's anywhere close to 10,000. This is over 11. The next closest, I think, is my Apple shares at about almost 5,000. And I've got about 3,200 in Facebook. So there you go. There is my E-Trade account, otherwise known as my IRA account. So there you go. There's my portfolio for the first half of 2020. Now, I set a goal when I was broke 10 years ago that I wanted to have $100,000 invested in the stock market by the time I was 40. Now, without giving away my exact age, maybe guess down below how old you think I am, but I'm pretty close to 40. Not there yet. But as you see, if we add up how much I have invested, I have about 70, almost maybe $80,000. So I'm close, and I think, cross my fingers, knock on wood, I'm very close to hitting that goal. And so that's the last thing I'm going to leave you with. Set goals in investing. If you have $1,000 right now, say right now, this time next year, you want to have $2,000, and keep upping the ante every year as your skills increase, and then the better job and the better income that you get as well. So set goals with your investing, and I promise you, 10 years ago when I set the goal that I was going to have $100,000 by the time I was 40 years old, I thought for sure I wouldn't come anywhere close to that. Here we are in 2020, and I'm very, very close to meeting and maybe possibly exceeding that goal in a few years. So hopefully this video helps you out. I'll be back again in December to do this again. I'll give you a year-end recap. Now, for the videos that I post mostly about stock analysis, and we go over the balance sheets and the cash flow statements and the statement operations, I'm going to be hitting you guys hard and fast with those, but probably in about a week or two. We're in the midst of earnings season and the big companies start reporting here in a week or two. So expect lots of videos here in the near future. Leave me a comment below if there's a company you would like for me to cover here on the channel. I've got a nice long list. I'm kind of waiting for some earnings reports because we've had so much turmoil and so much stuff happen in the world the first 6 months that I really need to wait and see how these earnings reports turn out to really give you a really solid analysis on what I think might happen the next 6 months, maybe even 12 months of these companies. So hit me up with a comment below. If you like these videos, like what we're doing here on the channel, maybe consider subscribing as well and hit that like button as well. Thanks for watching. Hopefully you guys enjoyed this. Good luck with your investments.